What's going on, guys? This is Chandler Smith, and today I'm going to be talking about the pros and cons of investing in commercial office space. I'm going to show you how I landed a huge deal on this law office building, and I'm also going to talk about why for a long time I was really afraid of investing in office space. I'm also going to talk about some of the things I did to hedge my bet or lower my risk so that this has turned out to be an incredible deal for me. So with all of that being said, let's jump into it. There are a couple big pros and cons to investing in office space compared to residential real estate, and I want to hit on all of those. The first big one is when you are renting an office space to someone, you have what is called a triple net lease. Now, I could go into a lot of detail about this, and I know it sounds intimidating, but essentially it means they're covering all of their expenses. So when it comes to the lawn care, the taxes, the insurance, all of those things, you don't have to worry about because they have those under their name while they're renting from you. So it makes it so that management is super low key. You almost don't have to do anything, and you could manage these completely on your own. Now that makes it extremely advantageous. The other thing that's really cool about one of these leases is usually they're on a longer term, whether it's 3, 5, even 10 years. And so once you get the right tenant in there, you know that you are set and you're not going to get hit with a lot of crazy expenses because a lot of the expenses are taken care of by them. So I know a lot of you are saying, holy cow, Chandler, that sounds incredible. It sounds like they're in there for a long time. There's a lot less maintenance. You don't have to worry about things. You're dealing with a higher class of people all of the time because obviously they can afford to have their own business. And I would say to you, yes, those are huge upsides. However, the thing that really is scary about getting into commercial real estate or renting office space is vacancy. Because here's the deal, you might have someone for 5 years, but if that place goes vacant and you still have a monthly payment, you could be vacant for a month, or heck, I've seen places that go vacant for a year before they find a business to replace that space. And so there's a lot higher risk when it comes to vacancy because when you're renting residential real estate, if you go a couple days without filling it, you can lower the price, you can throw in little aces. It's easy to try and find someone that's trying to find a place to live. But if you don't know what you're doing and you end up with a large vacancy in a big commercial office space, you can find that you're losing your return very quickly and even getting into a dangerous place. The other thing that's scary about this is people always need a place to live, and obviously businesses always need a place to run. However, if the economy gets hit really hard and a lot of small businesses go under and a lot of businesses then don't have office space that they're using, again, you can get hit really hard if you don't have the right tenant or you don't know how to get the right tenant really quick when you have a shift in the economy. So those are the pros and cons. The other con I see is a lot of times with getting financing, it's harder to get as good of financing as you can with residential real estate where you can get a 30-year fixed loan and you're set up in a place where your rate is locked and it's not changing. Where when you're renting out commercial office space, a lot of times you've got different options for loan packages, but you're usually looking at a 20-year term. You're looking at the rates changing every 5 to 7 years. It's maybe a little higher to get as low as a 25% down, even though it's possible. And so you look at this situation where financing might not be as good. So you can see there are definite pros and cons. Now, some people will say, oh, I would never do office space. Other people would say, oh, I will never do residential property. And as you can see with those pros and cons, you've got to decide whether you're okay with the pros and the cons before you invest in it. Now, I had reached a point in my investing career where I said, you know what, I've done extremely well with residential real estate. I really want to get into the commercial side of things. So I was looking at a bunch of different commercial spaces that I could buy, and this law firm came up for sale. Now, the law firm was in a very unique situation because the lawyer's lease was completely up. So they were going month by month. The seller was also in a unique situation because due to their financial situation, they had to unload this property quickly. So now you have lawyers that don't have a longer lease and you've got a situation where they want to unload it. So here's the catch with this property. I found it, and it also was my father's law firm. Now, he's in a partnership with multiple lawyers, but immediately I said, okay, this is a really cool building. They're month to month and have been thinking about going to a different space, and I know that because they've been talking to me, but I also know that the seller is wanting to get rid of this property quickly, and so right away I know it could be a really good buy if I could get all the pieces to fall into the right place. Now, in my mind, the perfect setup would have been to go to my dad and his partners and convince them to sign a 10-year lease at incredible rents, but not until I could negotiate down on the price, because then I can get them way down on the price because they don't have a lease on it. The person was wanting to sell, and we thought it would just be a perfect situation. Now, I approached my dad. He was all on board for this. He doesn't have any problem paying rent every month, and the rent they were at would have been more than enough to make it work for me, especially with a clause in the rent to where it increases on a yearly basis. However, his partners knew that I had huge upside on this, and there's nothing wrong for them wanting to get a piece of that. So what we did is we sat down with the partners and we said, all right, let's use your situation as leverage and let's find a way to put this together. Now, I'm not going to go into super detail on how we split it, but essentially we all took ownership in the building, and I've got a very great chunk of ownership in this building. We also made a down payment, which I ended up covering the bulk of the down payment for the property. But because they were involved, we were able to get awesome financing to where we only needed 10% down for the property. Now, a lot of this stuff, I don't want to go into detail because some of it is somewhat confidential, and I'm just going to share with you what I can. But because I had a connection with them, we were able to use them as leverage and say, look, they're not going to stick around unless you come down this far on the purchase price. And so we really grinded hard with the seller and were able to get them to come way down on the purchase price of this law office. Because we had that leverage, we not only got them way down on the price, but then when we went to go get financing, because they're in the actual building, they are way more willing to give you good financing. And so we were able to work it out where our financing only required a 10% down, and we got a really great rate setup. To make things even better, I am getting an 8.5% return on all of the money I had on the down payment. So now I'm in a situation where I have a guaranteed return on rents. I'm getting to take fat depreciation on the property because of my ownership in the property. I had instant equity because we negotiated so low on the price, but now we have them paying a certain rent every month. So the value of the property is substantially higher than what it originally was. And when these lawyers get to the point where they are ready to be done, what we're going to do is we're going to have them sign a 5-year lease for a large amount. Now, it's not going to be a crazy amount. It still needs to be fair or just slightly above market value. But by us doing this, then we can all come together and say, all right, this is what the law firm is willing to pay in rent for the next 5 years. And now we're going to sell the building to another owner. Now they're in a scenario where we can sell the building for substantially higher than we bought it. I mean, I'm talking big numbers, over $500,000 more than we bought it for, and hopefully even more than that, because they set the rent. They're gonna stay in the building and rent from someone else that doesn't have the ability to raise rents on them over that 5-year period, and everybody wins, so that I will have huge equity upside, a huge buyout when we do end up selling the building, and a huge interest rate in the meantime on the property. I know that's a lot of information, but the reason that I shared this with you is it's intimidating to get into an office space. And so when you can work with the people in there, there's no one way to do things. There's always a way to take a situation and add value. And so if there's nothing else you get out of my channel, it is that I find situations where there's a property. I find ways to get it for an incredible deal and then to add huge value and get cash flow in the meantime. So this property, I've been able to get a check every single month from the law firm that creates awesome cash flow. We have huge equity in the property that we're all going to benefit from, and we've got a great exit strategy so we can have an even bigger upside when we decide to sell. Now, if you enjoyed the video, please push the like button and subscribe to the channel, and I'll look forward to seeing you in the future videos. Thanks so much, guys. Have a great day.